So your gas station or convenience store loan doesn't seem like it's going to close before Y3K? They're really not as complicated as you think. The speed of getting gas station loans approved and closed is directly commensurate to the weakest link in the transaction. This can involve a commercial realtor, business broker, seller, seller's accountant, mortgage broker, borrower, borrower's accountant, seller or borrower's attorney. You get the picture. If any of these entities respond slowly, the whole deal responds slowly. It generally is best to keep one person at point and not have multiple entities involved with the financing arm as to prevent duplication of effort. Here are the top 10 reasons why your gas station loans do not close. Number 1, your package is disorganized. Many packages we see, they're just disasters. Many people expect us to put lipstick on their pig. Important in the submission is an understandable executive summary and usage of proceeds. Things that do not make sense get put on the bottom of the pile. The PetroMAC loan questionnaire asks most of the pertinent questions regarding the transactions. We do not like, nor do we want, a residential 1003 form. Some information isn't totally important at the beginning, like the name of the attorney, the accountant, or the insurance agent, but if the loan goes to the next step, that will be information you'll have to provide, so why not provide it now? An incomplete loan package will stop it from going to underwriting. Inquiring about status on an incomplete package will be futile, as the underwriter will not review the file until all requested documents are obtained and complete. Number 2, your financials are outdated. This really would be the main reason loans do not close. Most loans, unless they're funded by private parties, will require that you have financials that are not older than 90 days at the time of closing. With a gas station, frequently sellers will inflate the financials on a site the year they plan on selling the location by dropping the price of fuel and hopefully increasing gallonage. Don't think that that sudden spike in sales will make it more likely to be approved. Number 3, inability to verify source or amount of capital injection. It's a fact of life that many borrowers borrow money from friends, relatives, and people that love them. There isn't anything wrong with that. The problem arises when an underwriter does not have a grasp of where the equity injection is coming from. Underwriters do not like to approve loans where borrowers do not have skin in the deal. If part of your equity is coming from borrowed sources, including home equity loans, please tell us up front. There will be less surprises on the loan. Number 4, inability to come up with the capital injection. This is an extension from the prior reason. If part of your injection is coming from another source other than yourself, you run the risk of the loan not happening. This is why we ask for documentation of funds at the beginning. If you're looking to have someone deposit money into an account a week before closing, the loan most likely will not happen unless it's private funding. Too many deals do not happen because borrowers never obtain their capital. Number 5, insufficient or non-existent explanation of sales projections and expenses. There aren't many bigger things to show that a borrower does not know what they're doing or that they're not qualified than this one. When we look at pro forma projections that show a clear indication that the person cannot possibly be familiar with the standard industry expenses and costs, it makes you want to decline a loan immediately. You've heard it before, failing to plan is planning to fail. Well, you can take this one step further. Failing to plan a legitimate plan is also planning to fail. We found that the largest reason for default in this industry is that people have insufficient direct industry experience. Research the market. It's a pennies game. Pennies will make you and pennies will break you. Number 6, changes in personal credit before the loan closes. If you initially present a credit application and your credit score is a 740, and when it comes time to close, if your credit score is a 590, do not expect to have the same loan terms as when your score was a 740, or don't even expect it to be approved and closed. By the way, we do see this happen often. Many times people borrow money to get into business, whether home equity loans, credit card advances, etc., all of which have the potential to bring your credit score down. Don't go making a major purchase while trying to get gas station financing. Number 7, changes in financial statements before the loan closes. This would also be an extension of the inability to come up with the equity infusion, whether it's a change in your own personal financial statement or the financials of the gas station or convenience store in question. Number 8, insufficient values on real estate and or furniture, fixtures, and equipment. This happens frequently. That's why it's important that you know what type of deal yours is to begin with. Is it a cash flow deal or is it a collateral deal? If you have a location that cash flows really well and you send it to a lender that's primarily a collateral lender and they do not give credit for goodwill in an appraisal, you'll find yourself having to come up with more equity into the deal, seller equity, seller held second, or fuel supplier equity. Most of the time, lenders will not lend against the goodwill or business value of the gas station and convenience store, so be prepared for this. Most gas stations and convenience stores will have at least 10 to 15% of the total value in goodwill. If it has a little goodwill, this simply means the site is underperforming. Number 9, environmental issues. Most environmental issues aren't issues if you find out about it at the beginning and not months into the deal. If this is a purchase, ask the seller if there's ever been any environmental issues with the property, whether that be leakage, spillage, or environmental problems that have migrated to the site in question. Know if there's an open file on the site. Know if there's ever been remediation to the site, and if so, has there been a no further action or an NFA issued? Is there also an indemnification agreement from the owner at the time of the environmental issue? Many files stay open for years without closure. So do yourself a favor and look on the respective state's DEP or DEQ website and check out for yourself. Number 10, uncooperative borrowers and brokers. We know more about financing this business than the people who come to us for financing, which is why they come to us for financing. We don't know the hotel business. We don't know the restaurant business. We don't know the multifamily business. So if you want your loan to close, let's just make sure that all parties cooperate to make this as smooth as possible. One thing to point out, if underwriters do not have direct access to the borrower and have to deal through a broker, it makes it more difficult because it A, takes up more time, and B, makes it more likely that miscommunication takes place. Realistic expectations of financing are always important. We're not miracle workers, but we know how to get financing done for gas stations, convenience stores, truck stops, auto lubes, car washes, and auto repair facilities. Help us help you by being professional and organized in your deal.